Beware of these silver stocks. This video is brought to you by Interactive Brokers, ranked best online broker by Barron's for the 5th consecutive year. But more about them later in the video.
Looks like a great
and the other thing I liked about Peter's talk is that he kind of put things in perspective, you know, with people wanting a $50 or $100 kind of silver price. You kind of broke those fallacies. So talk to me a little bit about your price projection. I mean, when you hear these, and I know you've been uber bullish in the past. I mean, have you changed your tune?
No, not at all. Silver's a volatile metal, but bottom line, like, you know, everyth's coming together today. It's, you know, it's all about Archie's rule. You need to find the high grade deposits because Archie's rule, it has the price of silver on the x-axis, so it goes further out. But what happens is people will take a low grade deposit and they'll say, listen, it doesn't look great right now, but if the price of silver goes to 50, look at how much money we're going to make. It's going to be worth billions of dollars. But you know what? You need to adjust the operating costs as well, because what drove gold and silver higher? It's inflation. So inflation is going to drive your costs higher. So what happens is that lower grade deposit, those costs are going to go up 2-3 times, and it's still going to be an uneconomic deposit. So therefore, if you find the deposits in companies with extremely high grade and extremely accretive projects, those projects that are the best now, when the price of silver rips higher, those are going to be the best projects then as well.
And I'm not saying this to be promotional at all. I really believe it's educational. And that's why it's important to come out to these conferences or to subscribe to newsletters like yours, because you do the homework. You kind of, because there's so many companies, it's overwhelming. Like you go, if you went to PDAC, you'd be confronted with how many companies pitching you.
Hundreds.
You guys are doing the homework, saying, so you're basically focusing on the companies with high grade, with the grade.
With the grade, And then, you know, the silver industry, you know, it's a byproduct, so you usually have gold along with it. You've got lead along with it. You have zinc along with it. Every company reports their production difference. Some do silver equivalent, some do, you know, byproduct costs.
You reminded me of something. Let's wrap with this. What do you think of this movement of silver miners, you know, turning their focus to gold almost? Do you agree with that or not? Like, I get it's because it's harder and harder to find silver projects, but are they losing focus?
Money talks. You know, everything is bottom line money. Gold mine is more profitable than mining silver. You know, the average cash cost is, I don't know, $800-900 for a price of gold, so the margin's like 50%. The average cash cost for the silver industry, it's probably like $15-16. So the margins are, you know, less in the silver industry, which is why Pan American operated 4 silver mines that were barely, you know, only marginally profitable. They go after the gold mines. Now they're gushing with cash. So it's just a function of profitability. But, you know, when the silver price, you know, increases in the future and hopefully the margins increase as well, it will, you know, be more profitable.
So then you're still talking triple-digit silver then?
At some point.
At some point.
It's just the supply and demand equation is just, it doesn't line up, you know? And at some point, it's got to jump in price in order to even out the market.
So that's a great lesson for anyone investing in silver miners, in particular, silver explorers. And for me, that's what I look for, silver explorers that have got high grade. So I'd much prefer having a silver explorer that's got less resources, but at a much higher grade than a silver explorer that's got a lot more resources, but very low grade. Now that is a very good tip for those looking to invest in that space or are investing in this space. However, I did a video not too long ago called Gold and Silver 10 Baggers. Now, in this video, and if you haven't watched it, please do so. I'll put a link in the description below. There'll also be a link at the end of this video, because there's some lessons in this video which, if you're investing in this space, you want to know, especially in the junior and exploration space. And what I might do now is just cut to a short little clip from this video, because there's 2 big lessons that you need to be aware of, especially investing in the exploration space. So one is high grade, and the next one is at what life cycle of an explorer should you be investing and should you stay away from?
All right, share price, life of a discovery. This is really something to keep in the back of your mind when you're looking at a potential discovery. In the early stage of a mining company or exploration company, they're doing the basic work. They're accumulating the ground. They're doing the soil sampling, stream sampling, geophysics, that sort of thing. And you watch that, and when you start to see things come together, for instance, the soil geochemistry is pointing to some sort of large system. The geology is matching that large system. The geophysics is showing some sort of anomaly at depth. Keep that in mind, and that's a good place to start accumulating. Here's this section through here, we start to get the drilling. And again, you get successful drill results. That really rocks the stock, if you will. And we've all seen that. This is real simple, but a good deposit or a good discovery generally keeps getting better with each bit of news release, each bit of news information you accumulate, whereas a bad one starts to fail. And really 90+% of the potential discoveries end up running up this scale. And as reality sets in here, either the mineralization is not hanging together, the metal recovery is not working well, it's refractory, politics step in, they drop down below that, down into here. And more often than not, they continue down, and it doesn't really amount to anything. Likewise, even a real discovery, the period, it takes a year or 2 or 3 to do the technical work, the detailed technical metallurgy, engineering, and that tends to be a phase where people lose interest and the speculators leave, and the funds and larger companies and such start accumulating in this phase down here. I call it the orphan period. And more often than not, if the mine is working, you get your full value back up here. So there's 2 ways to make money on this, actually 3. The third, which is the one Joe and I prefer, is the deposit is so good that another company, major or mid-tier company, comes in and buys it. Generally, we don't like to see an exploration company transition into a mining company because it's a whole different mindset. So basically what I'm getting at here is know what a company's looking for, know the model, always check to see that the thesis is holding up, and when it's not, when things start to go wrong, sell. My experience the hard way has been that when things go bad, sell, don't even worry about the price because they rarely get better. Holding on, hoping for something better, it really doesn't work that often.
Interactive Brokers offers the lowest margin loan interest rates of any broker, according to stockbrokers.com 2021 online broker review, with interest rates on investment loans from 4.25% to 5.5%. I can assure you that's about half of what I get charged from another stockbroker. I use leverage to make arbitrage when selling options for passive income. But remember, leverage does increase risk and should only be used in consultation with your financial advisor. Now, back to the video. So firstly, investing in exploration stocks is highly speculative, okay? Very risky. And I get a lot of people that come to me and say, Steve, I want to invest in gold and silver. What stocks should I invest in? What penny stocks should I invest in that will just skyrocket? Because they see the multi-baggers, I've had a 25 bag, I've had multiple 10 baggers, and I say to them, slow down. Do you have physical gold and silver? No. Okay. Do you have any of the big miners, the big producers that produce profits, cash flow, pay dividends? No, that's boring. The first thing anyone should do, in my opinion, it's what I did, is buy physical. So go get yourself a 10-ounce bar. All right, this is a beautiful Queensland Mint 10-ounce bar. I don't know if you can really see that too well. This is a beautiful, beautiful bar. What do we got here? We got a 1 ounce American Eagle, 1 ounce Kookaburra, another 1 ounce Canadian Maple Leaf, and we got a 1 ounce gold kangaroo here. So first and foremost, get the physical, because there's no counterparty risk. And in today's environment, with the debt bubble that we've got, what we're seeing with bank runs, etc., there is a lot of counterparty risk out there, and a lot of people have got no idea. They're hope and prayer that they'll get bailed out if something goes wrong. I've had this meme for a few videos now. When you remember you own gold and silver, and this is it. When I've got this gold, I've got this silver. When I have that, and I've got a lot of it, I sleep very fine at night, because I know that if they're, put it this way, I don't have to worry about being bailed out owning this stuff. So be very careful investing in exploration stocks. Only put in capital in those in that sector that you can lose. But I first recommend getting physical gold and silver, work your way down, then start with the big producers that produce cash flow, that pay dividends. Then you might go down to the mid-tier producers, the lower producers. Exploration should be the very last thing you guys do. So, but for those of you that are wanting to jump in that space, keep educating, keep doing your research. Videos like this, I'll have a link in the description to that 10 bagger video. There'll be a link at the end of this video. Watch that. In that video, I also, towards the end of the video, share a few other videos that I've done. Mentioning videos quite a lot here, but there's some other educational videos when it comes to investing in mining stocks. So do your research, understand what you're doing. Don't just listen to someone else's tip. Don't just listen to other people, because if that stock goes down 30% or 50%, you're going to be having a hissy fit. And the thing is, you need to know why you bought a particular stock. And if it goes down and the story hasn't changed, then that's a good thing. Mr. Market's just provided you with a discounted opportunity to buy more. But if it goes down 30% and the story hasn't changed and you're having a hissy fit, you bought it for the wrong reasons. So anyway, guys, love to see your thoughts and opinions in the comments below. If you like this video, do us a favor and hit that like button. Take care, everyone, and I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.